Okay, g'day everybody. Good morning, good afternoon, good evening. Hope everyone's well. Can I get a quick sound check? Ooh, it's a bit laggy my end. G'day everybody, g'day Interim, J Money, Yo-Yo, Gunner, Full Reverse, Breakout, DRCDP, K Sokolov, I'm not even going to try that one, KS, I'm going to call you, VJ, Jenny, me, myself. Yes, me, myself, I do, but I trade from home, as you know, and basically I am in and out most of the time, and so I still do my 8 or 9 hours, a lot of the days, not every day. Some days I'll do about 2 or 3, but no, and I thoroughly enjoy it as well. So yeah, so there we go. G'day Bluefin. I'll see you next week. Have a good weekend. Catch the recording later. So, okay, this is our stream. Sorry, this is our quote from Monday. Randy McKay, and I thought this was a good one. So I thought I'd just leave it up there for you. But basically, in a nutshell, he says, when I get hurt in the market, I get the hell out. It doesn't matter at all where the market is trading, I just get out. Because I believe that once you're hurt in the market, your decisions are going to be far less objective than they are when you're doing well. That should be a full stop. If you stick around when the market is severely against you, sooner or later they're going to carry you out. In other words, you're going to come apart. You're going to do your dough. So the key takeaways: get hurt in the market, right? And he gets out. In other words, he doesn't hang around. He doesn't hang on to the losers. It doesn't matter where the market is trading. In other words, he doesn't care when he gets hurt. In other words, when he's emotionally, when the market's taking a toll on his emotions, he gets out. That's what he says. I just get out, because I believe that once you're hurt in the markets, your decisions are going to be far less objective than they are when you're doing well. So that's always a good one. And as we know, trading is 70% at least psychology, and if not more. And when our psychology is affected, that's when we just can't think clearly, and we're better off just getting out so we can reassess from the sidelines objectively. Especially if you're a shorter term trader and the market goes against you, and you've got soft stops, as I call them. G'day Morphus. You got soft stops in the market, and the market starts to turn against you quickly, and you've got a 6 or 8 pip stop. If that turns into a 10 or 12, there's nearly 50 to 100% of your stop, and that's what hurts. That's what kills you. It just kills you emotionally, and those that have been trading for a while will know it's not the big winners that we remember most. It's those big losers that we just end up saying, I can't believe I actually let it go that long. So this is what Randy's saying here. So, all right. Now, welcome to anyone that's new as well. I see a few new faces here. So, g'day, Nick. If you're finding it a little bit hard to sort of take in what we're talking about here, or some of the lingo or whatnot, don't worry, you'll pick it up. Now, what I thought we'd do, when I say I'm filling in for Andrew, I'm not filling in, of course, for Andrew. I'll do an hour's worth, and then Andrew will perhaps come on later. But Andrew's daughter's having a birthday, so happy birthday to Andrew's daughter, and he's spending the day, or at least the part of the day. So I thought I would just jump in, just muscle him out in his time slot, and jump in for him. So there we go. You obviously don't know me very well, James. Have you watched any of my streams, James? During the day or during my day? Because yes, one of my other styles, James, is I'm a scalper. Intraday scalper on equities, intraday scalper on FX, and g'day Willie, and intraday scalper on futures using Ninja. All right. So this one tonight is about Trading Academy, module 1 to 4, questions and answers and any other general questions. Now, I've already got a couple of questions already. So if you want to ask those questions, pop them in the main chat. But g'day, 4 candles. Yeah, fair enough, James. That's all right. But if you want to remain anonymous, just send me a private message, and you can remain anonymous. Now I'm going to play a video from the Trading Academy because it's part of one of the answers. So if you're named, maybe just if you're going to send me a message, just wait until we're finished with that video. Otherwise, it'll pop up. Excuse me. Okay, very good. All right, so let's make a bit of a start. Just bear with me while I transition over, folks. Alrighty, now we will just have a look at that trade idea that I posted as well. Let's just have a quick look at that while it's there. Alright, here it is here. Here's the one that I posted. And apologies for the first one. It was setting up as it was setting up as I was putting the idea in. So I hit the send button so you get their levels, and I hit the send button so you get the levels, and then I put the reposted the idea. But basically we've got our ABC down here, then we've got our push out, our thrust out, we've got our sideways consolidation, and then I'm looking for a breakout here. Now this is not your typical breakout. Oops, sorry. This is your breakout where we have consolidation and demand coming in. So the buyers are overwhelming supply here, and you can see the tests of supply here. So let's have a look at what the trade's doing so far. I did keep an update on it. So here it is here. You can see from the weekly's still powering on. Weekly looks good. EuroCAD. Right? It's a great area that weekly's in. And we do these analysis during the day. So here's our big pullback on the weekly. All right. You can see it's just a big sort of sloppy range. Big sloppy trend rather. We've got our cup with handle here. We've got our cup with handle within the cup with handle. Got a little flag here, little falling flag. We've got our push out here. So I've been watching it here on the weekly. So here's our daily with our little cup with handle here. We had the pullback here right into support. And we had the push out. I've been watching this one for a few days. So here's our pullback here, and you can see here is our shakeout here, and here's our bear trap. These do exist. This is an actual term, not just something I've made up. So you can see we were spot on with it here. Unfortunately, it's just suffering a little bit of weakness, and I know some people have already taken some profits here. I think it went to about 15 from the level that I posted, which is here. Though some people took 13s and 14s or something, right? And I know some people are even back here because we looked at it during the day. Now, James, when I flicked to the 15-minute chart, this is when we saw the proof in the pudding, all right? So now I know a lot of people take the signals and are happy just to jump out with 10 to 15 and then be done with it rather than wait for the targets. That's okay. That's entirely up to you because, as I explained in the streams, what the setups do is give us a directional opportunity. You can jump in and out as many times as you like, but just be careful. Don't overtrade. But this whole structure through here was what I absolutely liked. Right, we've got our anchor right here. It's through the anchor, it's held the anchor, and then it's pushing its way out. So this worked a treat. We just need it to hold now. So we can see the pullback here has been reasonably weak. I expected it to pull back within the breakout zone because this is where they shake people out, you see, once again. When the traders take their breakout orders here, their stops are going to be here, right? They're only going to put their stops about 8 to 10 ticks under. So you can see they come down and shake it out, right? That's why ours is down here. Now I said yeah, fair enough. Me myself, that's okay. I mean, look, I'm more of a active management style, without being too active. And I did say that the swing, if we get a swing up, right? In other words, if we get breakout and a hold through here, which we have, then I'll bring my stop in under this swing here on the hourly. So we can see here. Right, see the 20 period MA, just a simple 20 period MA. See, it's held it nicely. So I said we can bring the stop in under here. So that's what I've done. 154.20, I think it was. So here, you can bring it in a bit closer if you want, but that reduces the stop, because the stop originally was, I think it was 42. And the first target, which is a technical target, was about 30. So, the risk to reward is a little inverted, but the idea behind these is I take a third or 50% off here, but I'm really looking for a test right up here. Right, there's our 50 pips, right? And more, of course. But I will take what the market gives me. In other words, I try and position myself for the home run, but I'm happy with singles. So you can see our 50-minute chart. Here's our swing here, right? So here's our ABC, right? We needed to attack this level here. Right? So you can see it's done the shakeout. It's pushed up. We've got a little pullback here, right? I'll even go down the 5-minute. Right? So you can see here we've got our push up into the trend line here, our weak pullback here. So you can see it's trying. So here's the move down. Here's the stop hunt through here. The volume is okay. Would have liked it to have been a bit larger there. It's okay. You can see there's demand coming in here. So it's okay. If you're concerned about it, we've got CAD news in just under 3 hours. So if you're concerned about it, you might want to knock part of it out at break even. Right? So, you can bring your stop in under here if you want. 23. Yeah, that reduces the stop to 32. Right? I wouldn't go too. I wouldn't be bringing it in under here. Just let this play out. You can see it's still holding the trend. You can see we've got bullish pressure. So that's the trade idea. You can see it worked well, but unfortunately the euro's under pressure as well. All right, let's have a look. Euro New Zealand was triggered as well. See through here. See we've got our double bottom on the 15-minute, Mr. Carter. See this here? And then we've got our cup with handle with a smaller cup with handle. Oh, hang on. Let me put my... There we go. That's better. Sorry. So you can see this is broken out, and you can see this has failed badly. All right. Let's have a look at the euro. All right, here's the euro, the big move up here into tech res. All right, we're expecting the pullback, ABC here. All right, you can see it's finding a little bit of support within this structure. On our 4-hour here, we can see here's our ABC down here. Here's the tech target down here. We can see a little bit of a basing structure in here. See this here on the hourly? See the V reversal in here? Right? But it really has to attack this and start moving. It's trying. You can see it's trying here. There was a good setup through here. Right? So that's the story with that one. So it's still alive. So let's let's make a start. Now, these are the questions, and I have permission to show you who they're from. So let me just bring it down. So, Basilica and Fame of Me asked about overtrading, whether I could just expand on this a bit. And I started making a couple of notes this afternoon. Fame of Me asked about exiting too soon. The Fame of Me asked about risk management and position size. And Bluefin asked about fundamentals like pound last night or Trump's ramblings. How do they affect the market a week or so on? NFP and Carney last night made the market swing wildly. All right. We'll have a look at these ones. So what I will do, Bluefin's is easier, so I'm going to do his first. We've spoken about, here you go, here's my Bluefin's is easy. All right, so I'm going to do this first. Now, the market fundamentals do drive the market without a doubt, but sometimes they're lagging. And you've got to remember that the institutions take a while to build their positions. Now, we'll see, like with the British pound, price will be in a trending environment, and then the news comes out and we'll see it spike both ways. But what ends up happening is it then resumes the trend, either resumes the original trend, or if the news was bad enough to change the fundamentals, we'll then find that it can be the catalyst for a new trending move. But this transition can quite often take, up to a day. Because you've got to remember too, the institutions are, in a distribution, the institutions need this amount of time to get out of their positions. So this is how topping patterns are formed. So the short answer there, Bluefin, is let the market tell you, let it settle down for a day, and let the market tell you what it's going to do. You hear me talk about NFP, right? I'm not going to write it. You hear me talk about NFP and letting the markets digest it, especially on a Monday, right? So we're letting the market digest it and try and regain some direction. So, and I've always said that when opinions are one thing, but when traders put their money where their mouth is, it hits the tape, so to speak, right? And it results in a transaction. And that transaction is seen on the chart. And the chart is a reflection of the decisions by the mass, the sentiment of the mass. So if the sentiment after the news is still bullish, price should continue to rise. Okay? So there's been a change. We will see that we'll see that over a day or so. Okay, so that's in regards to news. That's how I play it. You might find though that the news has been reasonable and it's ranging, and then it just takes off and it'll keep taking off. You won't get that consolidation because the news has been good. Right. So that's Bluefin's done. So let's have a look. Basilica and Fame of Me in regards to overtrading. Now, I'm going to play the video from the Trading Academy because it sums it up pretty well, and I'll expand on it, and I'll pause and just expand on some of the points. But I thought that I summed it up reasonably well in that. But there were a few things that I jotted down here. All right? And we'll deal with these after the video. So just bear with me while I cue it up. Yeah, you're welcome, James. What about that 15-minute and a 5-minute chart, James? Was that good? Now, if you're new to the Trading Academy, if you're new to Forex Signals, on the right here is the Trading Academy. Right? Hang on, let me just go back to that for a sec. Before I do that, right, here's the trusted brokers. You want to check this out because you'll get the best commissions here, right? So you go to the Trading Academy here, right? And these are all the regular brokers. There's no difference in spread or anything. You'll just get the better commission. So in here in the Trading Academy, here's the trading tools. Here's Andrew's section of the Trading Academy, and here's mine. So click on me. Yeah, fair enough, James. Well, James, in a nutshell, 30 breakouts without suitable setups beforehand, in other words, a coiling or an accumulation pattern, the chances of success are about 30% success rate. So we wait for a suitable setup. All right. We've even described these in some of our member patterns we've started. All right. Now here's one. We call this the Triple D setup, which was the one tonight. And that was named after Dat Dude Danny. So there's the setup. So we've created a few names. We've got the Bluefin Wickfill. We've got the Yodel, which is the cradle pattern by Yo-Yo. And here's the one. Here's the Stevie base, the Stevie base. There's the coil prior to a breakout. So we're just having a little bit of fun, that's all. And there's a new one that came up tonight, which was Trendline Trader, came up on yesterday, which was the TT Pin Bath. All right, so this one here, setting the stage. This is the very first module. This is basically what I'm discussing here is the realities of trading. So in here, the top trading mistakes. So now just bear with me while I just get it playing, but I'm just going to just ignore the echo in a minute. I just want to see how the volume's coming through. You want to check this out because you'll get the best commissions here. Oh boy, that's lagging big time. Sorry. Okay, so I'm going to test that, and I'm going to test the audio. Testing the audio. Okay, so I'm going to test that. I'm going to test the audio. Testing the audio. All right, I'm not getting the audio coming through from the desktop. All right, I'm not getting the audio coming through from the desktop. Right, here we go. Sorry, so, wrong setting.
Let's have a look at the topics for today. Topics for today are trader mistakes, okay, in regards to execution, and trader mistakes in regards to psychology.
Right, here we go. We're on.
Well. Now, it's important to make a bit of a distinction here, right? But they also aren't listed in any particular order. So, the top trader mistakes. Now, before we start here, it's important to make mention that close to 90% of all traders fail or lose money. The remaining 10% somehow manage to either break even or make a small profit. So how do they do that? Okay, and how do they do that consistently? Now that's the $1 million question. Now, while there's no magic formula, no secret sources we discussed before, there are, however, some foundational and fundamental mistakes the traders make that prevent them from being successful. So the list that we're going to go through here is by no means exhaustive, but these are some of the most common mistakes the traders make. So the winner is no strategy or system. So, how are we placing trades, basically? Okay, no methodology for analysing the markets. So if someone can't analyse the markets properly, how do they define a trend? How do they create the structure? So that's one of the biggest mistakes, and probably right up there, I would say, is number 2. no trading plan or strict set of rules. So, once again, how do we define our trading functions? And look, we've all heard it before, but the old cliche, if you fail to plan, you plan to fail. And that is so true in trading. Not getting a proper education, okay? This is important. Now, whether that's whatever education it may be that you choose, but not getting an education is simply a recipe for disaster here. Okay, having unrealistic expectations. We spoke about this in one of the previous videos. Overcomplicating it. We also spoke about those in one of the previous videos. And if you heard my story or you've read my story somewhere, you realise that was one of my problems, overcomplicating things, because that's just how my personality is. That's just how my mind works. So, okay. Now, if you've outlined your strategy or methodology, you absolutely must have the discipline to follow it to the letter. Lack of patience. So we know that markets only trend 20% of the time. So while the market's not trending and while it's not conducive, we have to learn to be patient and stay out of the market. Okay, you probably heard me say a few times that I'd rather be out of the market wishing I was in than in the market wishing I was out, and that is so true as well. So we have to be patient, waiting for those times when the market is not conducive, and be able to strike when it is conducive. So lack of patience, of course, leads into overtrading. Okay. Now, there's also a feeling that we're trading, we must be doing something, we must be making money, that sort of thing, and that is another reason that traders will often overtrade. Now, one of the ways around this, I won't go into too much detail, but one of the ways around this is to remind ourselves that there'll always be another trade. Okay, so overtrading leads to suboptimal trades. A desire to trade everything. Okay, so we're trading currencies, we're trading commodities, CFD commodities, we're trading the index. What all this does is just dilute your edge. Okay, you never really have an opportunity to specialize on, say, one instrument, one market. We never really learn the character or characters of one or two markets. Okay, so just because we're in the mood to trade doesn't mean we have to trade. You've heard me speak about having a 2-hour trading session and placing not one trade. Okay, so that's still fine. We have to realize too that sitting on your hands, as I call it, is basically just sitting out waiting for the market to be right. And also, don't forget too that being sidelined, sitting on the sidelines, is also a position. Okay. Lack of money management. Now, this topic alone deserves far more attention, which we'll go into in future videos. However, some of the basic mistakes here are trading too big a position, no stop loss, too much portfolio heat. In other words, having too many positions on at one time, too many correlated positions as well. Over leveraging, of course. So, brokers, they afford us, a lot of leverage, and whilst this can be good in one way, and can amplify and increase our winnings, it is also a double-edged sword, right? And when used dangerously, it really is a disaster, especially for the inexperienced trader. Okay, so choosing the wrong time frame. Okay, we're sitting down to trade and we're focusing on the 1 minute chart, which is noisy and bouncing all over the place. How are we able to make a longer term decision? Or starting with the too small a time frame. Okay. Hoping a bad trade recovers. Now you'll hear me speak about hope, fear, greed, all those sorts of things. Well, hope is one of these emotions. Now, hoping a bad trade recovers, this is where the trader's got to rewire their thinking, because it doesn't come natural to us. Now, I'm not going to go into this too much, but we will go in later videos, but basically hoping in trading is not the emotion that we want. Exiting winning trades too soon. Now, this is one of the most common mistakes. Basically results from not sticking to our trading plan in regards to, say, trade management and our exit management. Trading too big too soon. So we're starting to trade, we're just getting the hang of it, we're just getting the feel of it, and then we're getting flooded with emotions because our trade sizes are too big. Okay, we never get the opportunity to develop our mental muscle to cope with it. So we'd never have that gradual stage, but that allows our brain to start to get used to the new sizing. Trading both sides of the trade. So traders believe that they can trade in and out every pullback, every retracement, but the reality is that you can't. Okay. Trading for the thrill of it. Okay, we've all heard the saying that good trading is boring. Okay, well, this is so true. Just because the market is open, that doesn't mean that we've got to start placing trades. Okay, we need to be able to place trades when the probability is stacked, in our favour. Okay. So to recap what we've learnt, we learned about trader mistakes in regards to execution, and we also learnt about trader mistakes in regards to some of the psychology errors. So in our next video, we're going to look at the stages.
Okay, looks like I'm back. All right, those of you that haven't seen that before, I suggest you go and watch it again. Now, did you see what I did down here too? I had it on 1.25 and you could still understand it. Reasonably well. Okay? So if you're watching them in future, I suggest you do that. Okay? So the question, so yes, I suggest you go back through this. And I mean, we did a 9-minute video in, probably 7.5, something like that. So the question, of course, was pretty much overtrading, right? Now, the reason I play this is a lot of these mistakes basically point to the reason why traders overtrade. And a lot of these mistakes are basically going to cause overtrading. And we said here, the very number one, no strategy or system. So, when we don't have a strategy or a system, well, what's our entries and exit? All we're doing is we are reacting to the movements within the market. We've got no, we've got no plan. We've got no, under what conditions do we open a trade? We've got nothing. You see, this is the number one fault. Now, can you imagine? Let me give you another example, perhaps. Could you imagine employing somebody to do a job, but you don't give them any instructions? You just say, look, go and do your job. Go and figure it out. You'll figure it out yourself. Well, if that person's diligent in his job, he's going to go and try and make himself useful, but he's not actually going to be doing the job that he should be because nobody's told him. He's got no plan. He's got no instruction. So he might be doing little bits here and there, but he's not actually doing his job properly. So that comes back to no strategy, no system. The second one is no methodology for analysing the market. So how do we know when a trend is there? How do we know what constitutes a trend? How do we know when the trend is ending? How do we know when markets are entering a consolidation phase? Right? So what that does is just basically result in overtrading. Overtrading is basically just a result of all of these other mistakes, okay? A lot of these other mistakes. So, you see, I've made a couple of notes here. One was lack of a proper trading plan, or one that the trader has confidence with, okay? If you don't have confidence in your trading plan, if you haven't back-tested your trading plan, you don't know that it works, you're not going to take those trades. You're going to jump at everything else. You're going to jump at every other thing that looks good. You're going to be distracted by others. Every bit of a move, you're going to take the move that's already underway. All right? Lack of trading education, we dealt with that before. Lack of discipline and self-control. Well, if you've got no plan, how are you going to discipline yourself to follow that plan? Can you see it all feeds back into the trading plan? Fear of missing out. See, these are all going to result in overtrading, because this fear of missing out, when you take a trade from fear of missing out, you're taking a trade probably that's extended, right? Like in our CAD trade, Euro CAD, the market's here, it's consolidating, bang, and it goes. If you've gotten that signal and you've gotten it late and you've jumped in here when I said here, you've got the fear of missing out. And what did it do? It's come back and it's tested in here. Well, I'm hoping. So what it does, it puts you underwater. So the plan is you enter here or you leave it. If you got in here, well, chances are the move's already occurred. Let's have a look at it. What is it? Okay, it's just sitting here. There's our trade from before. Let's have a look at the 15-minute chart. All right, this is good. See here, if you've entered late, I said here. Right? Right here. See the couple of fake outs here? And we've got our little TT pin bath here. Bang, and away it goes. But if you've thought you've missed the move and you get in here, you're going to get 3 ticks of profit and you're going to be underwater. Right? See you, Gunner. Good to see you, bud. Have a good one. Right? Prices pull back here. See, we're holding this. This is good. This is looking good. Still looking good. If we get a bit higher, or if it breaks a high here, I'm certainly going to bring my stop under here because that'll be legitimate on the hour. See it here? And there's your 20 period at your back. Right? That'll give us about a 20 pip stop. You see how I'm reducing as the trade goes in our favour? But if it doesn't, I'm going to be getting out. I'm sorry, we've flicked back into the charts, haven't we? So can you see how this all leads back into overtrading? Right? So now we know the cause of a lot of this. Where's my video again? Right, let's have a look at some of the other ones. There you go. No trading plan. No, not getting an education. Unrealistic expect. Okay, those two probably don't apply. Well, overcomplicating it could be. You know, which signal do we take? Well, let's just take all of them. Right? Lack of discipline, lack of patience, right? Lack of discipline. If you've got no plan, how are you going to have the discipline to stick to it? How are you going to have patience to wait for the setups? Do you see it all comes back to the trading plan? Now you don't have to. A lot of you have seen my trading plans and my checklists. Yo-Yo likes them. Right. That's what I've created for myself. I'll show you my wave. Those that know me know that I'm an Elliott wave trader. So see the top green up there? That's the criteria I look for an Elliott wave 4 buy. Right? And I've used it that much that I just know it now. You see? I know under what conditions to take it. And this is one here. This is exactly one here on the 4 hour, on the hourly. See it here? Wave 4. Want to see this shake out? Want to see a push up? A hold? Away we go. Right? So the trading plan is an absolute must. Now, you don't need to go to the detail that I go to. What you must absolutely do is begin to put down your setups on paper. You need to begin to create a checklist that says, this is what I do to jump into the market. You don't have to do like I did. Put it on one page. Market must be in a trending environment. We must see a pullback to the 20 period SMA, let's say. Right? We must you've got to wrap some criteria around it. So when you start doing that, you've got something to follow. You've got a plan to follow. All right? All right? So that's the only way to get rid of this. Now, once you do have your plan and you find that you're still over trading, the next thing that you have to start doing is be mindful of what you're doing. In other words, when you find yourself wanting to take that trade, you have to stop yourself, and one of the best ways is push yourself away and say, you know what, I need to just take time out, right? You just sit back and you just breathe through it, wait for the emotion to calm and settle. Right? If you need to, get up and walk around, right? But you need to catch that thought, right? and you need to, and the only way you're going to catch that thought is to be mindful, not mindless, because otherwise you'll just end up in a spiral. Now, once you jump into that trade, also, you've heard me say that I'd rather be out of the market wishing I was in than in the market wishing I was out. Once you're in a bad trade, it just compounds the overtrading because you know you're in a bad trade, right? If things going against you, if it goes against you, you're going to look for other pairs, right? So you absolutely must stop yourself before you make that decision, and what that requires is being mindful, right? Now, there's other techniques and other methods that you can use, which we haven't got time to go into now, but if you're suffering from this as well, the one thing I want you to do before you trade, if you do nothing else, before you start trading, I want you to sit there and I want you to imagine yourself, visualize yourself sitting here like a good studious trader, and I want you to imagine yourself seeing an opportunity that you would normally just jump into without thinking. I want you to see yourself and visualize yourself stopping, breathing through it, get the air into your lungs, and think to yourself, I'm now being objective, I'm now objectively assessing that trade. Give yourself, say, a 10-second timeout before you even start to come back and look at it, and you'll find you've calmed the emotion for starters. When you jump back and look at it, I can guarantee that half of those trades, if not more, are going to be ones that you look at a second time and think, no, I don't want to do it, it doesn't fit my plan. So the number one thing, to summarise here, the number one thing is get your trading plan in order. Start your trading plan. Start to wrap some criteria around your setups. The second thing is be mindful. As soon as you feel that trigger, stop yourself, right? Otherwise, you'll just be in it before you know it. You've got to interrupt, right? Interrupt that thought. And the third thing is, when you interrupt, stop, breathe, reassess, right? The very third thing is, as soon as you sit down, before you even sit down, I want you to visualize yourself being the disciplined, the patient trader who follows his trading plan and doesn't overtrade. Visualize yourself in that situation. Close your eyes if you have to, and breathe and visualize yourself seeing that setup or something that would trigger you. Picture yourself and visualize yourself just calmly stepping back, right? Maybe having a bit of a stretch, getting the oxygen in, taking that 5 to 10 second time out, and then come back. All right? Visualize yourself doing that. All right? How's that? Right, there's some other things, but the time doesn't permit. We're 3/4 through already. So we'll try and work through a couple of the others. One of the others here from Fame of Me. So Basilica and Fame of Me. I hope that's helped. Please let me know if you've found that has, and just try it and let me know how you're going. Let me know in a week how you're going. Let me know in a couple of weeks how you're going. I can guarantee it's going to improve. Now, Fame of Me has said about exiting the trades too soon. Now, very good, Basilica. Now, this is one of the most common problems. So if you're at the stage where you're being consistent, but you're exiting too soon, number one, give yourself a pat on the back, because you're now at a stage where you're finding a problem. Now, remember I said before about being reasonably consistent? If you've got your trading plan down pat, you're reasonably consistent, you're perhaps break even or profitable, and you're having this problem now, you've actually advanced to a level where you're in amongst even, I suffer from this, right? And I try and do exactly the same. As soon as I see, the setup, it's punching, I was down in my gym before. Yeah, good question, full reverse. Yeah, please do, Basilica, right? the potential stall area now for revert is going to be here, isn't it? Right? You see, I saw this down in the gym. Well, I was down in my gym and I had my tablet with me. My tablet PC, and I saw this while I was down there, and I was watching it on a 15-minute chart, and I saw this big bar here. See these three here? This is actually an evening star with a hanging man. See the bearish pressure came in. See the demand, supply overcame demand for a period. I saw this, and I was contemplating myself here, dropping part of it out here. It wouldn't have been a whole, it would have been maybe 10. Yeah, there you go, 11 pips. And I stopped myself and thought, no, and also too, I'm reporting these for you guys. I've got a spreadsheet just for my trades. Right? I'm reporting these. See down here? So the last thing that I want to do, and I mean, I'll take a couple of profits. The last thing that I want to do is kneecap the trade. Right? So here's our little graph here. Here's what we've done. We've won 571 pips. We've lost negative 94. We've got a win rate of 79%, average win of 52, average loss of 31, and we've got a profit factor using the pips of 6.1. Now, those of you that know statistics will know what that means. Right? We're only taking the highest probability trades here. So, now I'll deal with your question, full reverse. Okay, you've said exactly what I answered, haven't you? So full reverse has said, if we hang at the current resistance for a considerable time, would you consider exiting the trade or stick to your trade? Okay, this one here, we want to see this pop here for starters. You can see price is coiling here. If we go back to the 5 minute, Mr. Carter, see here? See this demonstration of strength here? You see that we've got prices come down in another little ABC on the 5 minute. We've got bullish order flows come in, and see we're holding this bar. So this is a good sign. So we want to see this taken out, which it's trying to do. We can see this pin bar. We've got the bluefin wick fill, and we want to see the TT pin bar, In other words, when this pin bar fails. So we want to attack this one for starters, and then this is another key one here. All right? So I've only zoomed in to give you a bit of a micro look at it, but this is one that we want to see, and I want to see this. So I'm looking at what we do here. I'm looking for what price does here. Now, it's 10:20 my time. In 2 hours, we've got news. So even before the news, I will probably drop half my position out. CAD news, right? Here we go. See, this is pushing up now. This is looking good. Okay, so where do we get? All right, so exiting too soon, right? Same thing, have your plan. Have your plan for trade management. What constitutes getting out of the trade, right? What constitutes scratching the trade? In other words, no, when I say scratching the trade, what I mean is that the trade premise is no longer valid, so I'm getting out of this. So I'm taking my bat and ball and I'm playing elsewhere, right? It hasn't set up. Or it's you're welcome, full reverse. Here you go, look at it. All right, this is good. This is what we want to see. See that? See, we've got almost the identical pullback on a smaller time frame. See that? This is why these are such good trades. Now, VJ, if you're listening, see this here? Here's our ABC, and here's our start of our 1-2 up. It could be ABC. I hope it's not. All right? When I say I hope it's not, but I've got to go on what we see now. You can see it's trying here. It's going through the shakeout motion. Oh, he is here. Very good. Very good, lad. Love your sketches. So, exiting too soon. What is our plan for exiting? Do we even have a plan for exiting? If we don't, then of course we're going to exit too soon. Now, double zigzag, VJ. And exiting too soon also comes from a fear that the market is going to take our profits. So what you have to do, and Jesse Livermore says this, whereby hope and fear, we have to flip this when it comes to trading, because when it comes to trading, naturally, we hope that our loser comes back, and we fear that the market's going to take our profits. What you have to do is flip that in reverse and fear that the market, that your loss is going to turn into a bigger loss, and start exiting it early or exiting it at your loss. And then you have to turn that hope into, we hope the profit becomes a bigger profit. All right? So exiting too soon comes from, it also comes from a bit of perhaps a scarcity mentality. I'm not saying that's the case, where things are hard to come by, so I'm going to grab all the profits that I can. All right? And one of the stupidest sayings I've ever heard, and I apologise if I'm offending anybody, is a profit's a profit. You can't go broke taking a profit. Well, that is absolute garbage. If you're taking 3 and 4 tick profits, and then you get the big loser that's a 40 tick profit, 30 tick profit, it's going to wipe out all of your profits in one go. Okay? There's an old saying that most traders eat like birds and they crap like elephants. Mark's on a real roll, isn't he? So there you go. So that's part of that. All right. And we'll finish on the last one, and then that'll be our hour done. So exiting too soon. Once again, the same thing. Stop yourself, right? Use that interrupt mechanism. Stop yourself and just look at it objectively. Is there a valid reason for me getting out? What does my plan say? What do I look for in terms of exit? Right? That's how most traders trade, John. Right? In other words, they're taking these tiny little profits all the time, and bang, they get the big loss that wipes out 5 of their profits. So, risk management and position size. All right? So, okay, we've got a 10 grand account, let's say. We should never be risking any more than 1 to 2% of our account balance on any trade. If you're using 1%, in theory, that means that you've got to be wrong 100 times in a row to wipe out this account. And those of you that know statistics and maths will know that it's more than that, because as it comes down, the percent lowers. So 1 to 2% means that of this 10 grand account, the maximum that we're going to risk in any one trade is $100. So what we have to position size accordingly. Now Andrew is given the position sizing tool. Where is it? Right, see here in the Academy. If you're a full member, if you're a trial member, you won't have access to these. If you're a full member, go to the tools. See this one here, Risk Manager EA. Right, it's an absolute beauty. So go to this, download this, right? Pop put it into MT4 and use it, right? So 10 grand account, the maximum we're going to risk is $100 or $1 to $200. Let's say we work on one. So if we know, say for example, say the Aussie dollar, which I have, my accounts are in Australian dollars. So if I'm trading the Aussie dollar, right, and I've got a 100 pip stop, that means the maximum size that I can trade is 0.1, $1 per pip. Right? So the smaller my stop, the bigger the position. I might go to, if it's a 50 pip stop, I'll be able to trade 0.2, right? That's how you work it out, right? Now this is just an example, but you must stick with that. Now quite often I'll be, there's our hour, quite often I will be less than 1%. If I see a trade that I think this is not bad, right? I have high conviction in this, I might be closer to 0.9, something like that. If the market, like some of the weeks we've had, is not good, I might be back to 0.35% to 0.5, right? I set my risk before I jump in. And it's all dependent on what is your stop. If I'm a scalper and I've got a 10 pip stop and I've got $100 risk, that'll allow me to trade one lot. 1.0 standard lots, provided it's on the Aussie dollar. Remember, each currency has its own different conversions. So, all right, I hope that's been helpful. Right, see on the hourlies are still holding. Right? Don't drill down to a 5-minute chart to see where you can yank your stop up. Okay, so the last question is, I was wondering if it is okay to focus on one currency. So say I wanted to trade the CAD. So I only trade dollar CAD, New Zealand CAD, Aussie CAD, etc. Would that be a bad idea? No, absolutely not. And what I suggest you do is, start with say the dollar CAD. Right? Because don't forget these others here. You're introducing New Zealand on its, which has its own idiosyncrasies and it has its own characteristics. Same with the Aussie. So just try dollar CAD. Start to get used to that. Then if you find that, yes, I don't mind this at all, this is working well, then you can move on. But try and master one strategy, one currency first. Then move. Right? There's a saying that I said in the Trading Academy, chase one rabbit. If you're chasing all too many different, you're never really specialising in any. Okay? So absolutely, just focus on one, but maybe observe these ones and see how they move when the dollar CAD moves. Out of these ones, the dollar CAD, I'm sorry if you can't see that too well. Out of these ones, the dollar CAD is the one that is going to be, the dollar CAD is the one, it's got the thing on it. The dollar CAD is the one that is going to be probably more liquid. But observe these and see how they move. You might find when this trends, well, this one lags a bit and so forth. But you see what we're doing here. See with the Euro CAD trade here? We're observing the Euro as well. I'm observing the Euro mainly. Well, you see the Euro's under pressure? All right, so the Euro is actually falling down. This could remain in its downtrend. It's still in a downtrend on the hourly Euro. All right, so we're fighting against this. I was hoping this was going to base and push up. All right, Euro Aussie. All right, it's getting hit. See this on the hourly? It's getting hit as well. See? Euro New Zealand. Oh, sorry, let's have a look at Euro Yen. It was doing okay. See, it broke out here. Broke out here and pushed up. This one did well. I mentioned this one as well. The only reason I didn't post it, see, it's getting close to the trend line here. See it here? So I had a feeling it was going to go up. See, it's failing now. When I say it's failing, it's still in a downtrend. It was this move here that we were looking for. Euro New Zealand. See, it's back under pressure. See, it tried with the Euro. So in fact, in actual fact, this Euro CAD trade has actually stood up reasonably well. Out of all of them, now you've seen all the pairs, we just went through it. Will you tell me which one's held the best? It's Euro CAD. So that tells me that this setup is valid. It's just under a bit of pressure. So my stop's under there now. So there we go. Now VJ, I probably won't answer your question, I'm sorry, because I know yours is going to be pretty long and pretty involved. Oh, you've put it in again. All right, hang on. Let's have a quick look. All right, VJ has said, Mark, my problem is I entered at the exact top and bottom, but with a small lot size. Then it will come to my way. While I'm in profit, my mind says we will add the more lots in the correction wave 2, but I am failing to add more. Then if the third wave or C wave starts, my mind can't tolerate what I did. All right. Oh, I saw it, VJ. Yeah, I saw it. I've got it here. All right, look, VJ, that's pretty involved. That's probably not something I can do justice to in 5 minutes. All right. So, but what I am going to say is you need to learn to, number one, learn to forgive yourself, because we're only human. We're only human. So learn to forgive yourself, right? If you're failing to add more, that's okay. You will get there over time, okay? So just think of it as, just make it a goal that you will conquer this, you will achieve this, and maybe, well, I think I did, VJ. Maybe just try, if you want, open up a second trade in demo and try to scale in on that so you start to get the feel for it, all right? Don't use your live account, use a demo. So I'm dealing with your, here, my mind can't tolerate what I did, right? you'll need to show me on an example here, VJ. I'm sorry, I'm not trying to get out of answering it. It's just I can't really do it justice in 5 minutes. So, okay, everybody, we might stop there. We might sign it off there and finish there. Is that okay, VJ? Can I save this for next time? I'll try and answer it for you. I'll try and answer it maybe for you just privately, if you like. So, all right. Okay, everybody. Well, thanks for your company. I hope we've been able to answer a couple of the questions for you there, perhaps next time. Yeah, just the full reverse. The EuroCAD looks okay. All right, EuroCAD still looks okay, but there's a bit of, when I say strength coming against the position, see it here? This started out beautifully, and now there's a bit of strength coming against it. All right, you see this swing here? See it here? If we get a break and hold here, I'm going to start to unload. All right, I want to see the fake out here and then a move above. So you can see it's really having trouble here, right? So, right, that's negative 15 at the moment, right? So I'm not going to let it go right down to this point on the full position. What I want to see, and it's unfortunate because it started out so incredibly well. Right, this is a 15-minute chart, right? So see here, I want to see this fail and then come back up, right? You're welcome, guys. Richard Laney, VJ, Sungate, Yo-Yo, Basilica, Willie. Right, I want to see it start to fail here, but if I get price acceptance here, and especially if I get a swing here that takes out this low, I'm going to start to get out of the trade early, right? And then I may, so if I get out here, it may be negative 18. And then here, I think this is 20 something, so it's negative 25. Or what's that? 43, right? Divided by 2, I've taken a negative 23 instead of negative 40. You see how I'm doing it? If it's not playing, I don't want to be part of it, right? I'm out of here, right? So you can see it's having a bit of trouble. Yeah, that's it, VJ, right? You know, look for the swings that it's going to attack, right? You can see on the hourly now, see the strength coming in. You know, we had a good go, but look at the volume still coming through. All right? Don't be frightened to do that. Now you know how to unload the position as well. Double click on the order and change the. Let me see if I can do it with this. Let's say I've got an order down here and I've double clicked on it. Take it down to maybe reduce it by 0.05. And hit the sell button, right? Yeah, see this is getting a bit strong now. All right, look at the 5 minute. Yeah, this is a bit too strong for me. All right. So what I'm doing is I'm protecting my risk as it's going against me. All right. So I'm going to probably, when I sign off, I'm going to take half off. I don't like this now. Disappointing because it was such a great setup. You know, even the ABC, C is right up here. Now I'll show you that graph. See this graph here? Now I've taken 2 losers in a row. Right? But you see here? See the effect is negligible. Right? That's how you got to keep. That's how you got to trade. Right? Keep the risk first. Preserve first. Right? So I want to see this fail here very soon. Okay, everybody, have a good weekend. Trade safe. And Andrew may be back on a little later. And yeah, I won't be doing any stock scans over the weekend. I've got a pretty big weekend. I've got the Saturday morning traders meet tomorrow morning. So if you're in my area, so tomorrow morning, 10 o'clock, I've got a coffee meet. So there you go. So you're welcome to come along to that. We get about 12 people. So there's an invitation for you. Tomorrow morning, Wheelers Hill Hotel, 10 o'clock. Coffee, tea, juice, all complimentary. All right, everybody, be good. Now, if you do your work over the weekend, just try and take a break from it as well and enjoy life. Enjoy your family, enjoy life. All right, everybody, take care. Talk to you soon. Bye for now.